Is this the week, Josh, that we're going to look back and say we confirmed the rally or we questioned it? And I pose it to you that way because we did have the hottest inflation read in some 30 years, yet we're higher today than we were post-CPI. That's got to tell you something. The other side of the coin is, okay, it means that rates, which were going up this week, may continue to do so, and that may put at least a damper on stocks. Which side are you on?
Well, I think the way the market seems to be interpreting the very hot inflation read is that it's backward looking, and probably a lot of it is. And if you think about the big concern going into the last couple of weeks when earnings season started, it was that this is the quarter where we're really going to see those inflation pressures felt in the bottom lines of America's largest corporations. In fact, that's not what happened. There was a lot of commentary from CEOs and industry leaders and analysts and economists about all of the various costs that were going higher, everything from labor to raw materials to the transportation of goods, et cetera. But in the end, Q3 right now, and we're through most of the largest companies, looks like it's tracking 12.9% net profit margins. So if you think about that versus the 5-year average of just under 11%, actually, we're doing better not only than most people thought we would, but we're doing better from a net profit margin perspective than during most of the last 5 years. The story of Q3 earnings is that companies have been able to pass through those costs. Now, this is where people get really upset, so I'm going to say something that will ameliorate that. Of course, that can't continue on into infinity. We can't just relentlessly have higher costs and continue to pass them on before something breaks. Everybody agrees on that. So the question you have to ask yourself is whether or not the hiring will pick up and some of those employment cost pressures will subside. Not that salaries are going lower, but the rate at which they've been increasing will subside. I think that's reasonable to say. I also think it's reasonable to say that commodity price inflation typically ends because somebody says, you know what, that's a lot of money to be made. I think I'm going to supply that market. So if you're being reasonable about the inflation situation, you understand that the Fed is now on track to slow down what it's been doing. They told us they would. You also understand that a lot of the imbalances related to the reopening are starting to ease, and that's a gradual process. It's not an overnight flick the switch, we beat inflation. But as those two things happen, what stands in everyone's mind is that, wow, companies made it through, and I think that's what's being reflected in the almost all-time record highs in all the major